Hello everyone, Larry Leverage for Ichimoku.co and ForexTrading.tv with the daily analysis of the Aussie dollar US dollar FX for the trading day ending Thursday, November 21st, 2013. Well, a very large black body candle today, a very substantial sell-off. The black body denotes a very large amount of momentum to the downside built by the sellers in net terms for today's trading. They've made a substantial amount of net bearish progress on the day between the open and the close. They've managed to close outside of the 92.78 level that was potentially a moderate level of support. It had held for 3 candles here, with the market being strongly rejected from that area, and was taken out very decisively, and therefore suggesting that the strength of the amount of support there was not as strong as thought. The market then managed to close down outside the bottom of the cloud, and that is a very significant event with Ichimoku chart trading. It's a sell signal with Ichimoku charts, and is very important because the market has actually done that on a fairly bearish candle as well. What we want to see here is follow through to confirm that, and what we'd like to see is the market continue down with a lower high and lower low. No guarantee of that happening, because we have had 2 extreme trading days to the downside, 2 fairly large black body candles, and it's a question as to whether the sellers will be able to maintain this downside momentum and not suffer exhaustion, as we quite often see after extreme days. Now, the possibility of the market trading higher, though, may be severely limited. We have close by resistance now at that 92.78 level that was previous support, and that may hold up as a strong level, and it also coincides with the bottom of the cloud, and there is a possibility of the market rallying to this area and seeing sellers come back in if we don't see the sellers continue that momentum to the downside. Now, the price action was rejected from below this 92.21 region. If we look here at the recent past in August, that was a strong area of resistance, strongly rejected from that area, and then held as support following that. So we are now seeing some price rejection from there, so there is a possibility of this area at 92.21 holding a support. If the sellers can maintain that momentum that they built for today's trading, we could quickly see them trading down to 91.60, a previous level that has been broken, so it's not as strong as it was prior to that. And down below there we do have a zone of support, or potential support, extending from 91 down to about 90.50. So from this area here where we see the upside price rejection, and then we saw the downside price rejection from this little zone here, so some potential support around that region, and then obviously the 90-cent level, a round number, and that could be a critical level of support if we do see the market trend down there. We're not likely to see the market testing down to these levels quickly if the sellers do come back into the market. Now, just looking at the Fibonacci extension, and here we've seen the market take out the 61.8% level in a fairly bearish manner. This suggests that there is a real possibility of the market testing to the 100% level, which is down here at 91.80. And also with the Fibonacci retracement, we're now in an expansive mode of that. The 100% level failed to hold. There was potential for very strong support around that area, with the confluence of that area with the bottom of the Ichimoku cloud. The sellers have been that strong that they've blown that market away in a very decisive manner. And this suggests that if the market does trend down, we have potentially some support down at the 161.8% level at 91.69, and that coincides pretty much roughly with the other Fibonacci technique. Now, one of the things that I like to do is use Bollinger Bands, and I use them a little bit differently than the standard way of using it. What I like to do is place a 1 standard deviation envelope away from the moving average for the Bollinger Bands. The normal way is to use a 2 standard deviation, but to me, Bollinger Bands were originally set up to be a sign of strength in the market and relative strength. And to me, If we have bullish price activity, for example, above the 1 standard deviation Bollinger Band, we tend to see some very solid follow-through in the market trending. Then when we see the market come back to within that 1 standard deviation, we tend to see some sideways price action, again a breakout to the upside. And here we saw a bearish breakout down below the 1 standard deviation follow-through, a retracement back to within the band, and a bearish breakout down below the 1 standard deviation. And this does suggest that we have a very, very strongly negative market here at the moment. Now, quite often, after we see some very strong downtrending action, we tend to see, when we do see the retracement, we tend to see either the bottom band, the 1 standard deviation below the moving average holding as resistance, or the moving average. Now that 1 standard deviation level is at 93.13 at the moment, and the moving average is at 94.05, and coinciding with that 94 level of a resistance. So potential for strong resistance at those levels, or at the 93.13 level, coinciding with the 93.30 level of previous support and resistance. Now that's just one way that we can think outside the box and use the Bollinger Bands, but we also look for the squeeze, and here we have a squeeze and the very strong trending price action, and something of a squeeze here and a breakout down below. We're not seeing any squeeze here, but we haven't seen any substantial widening of the bands at the moment, a slight widening, and this may suggest that there may still be some potential downside left in this market. Now just moving back to the Ichimoku charts, and as I've already mentioned, we have a bearish signal with the market trading down below the Ichimoku cloud. For greater confidence, we want to see follow through. I want to see a bearish candle with a lower high and a lower low. And we also have the market trading down below the Kijun-sen and Tenkan-sen, and we have the Chikou span down below the corresponding price action, and that's confirming the negativity that we're seeing in all three timeframes. And this suggests that we have a valid and a very strong likelihood of the market continuing down. We have a valid breakout below the bottom of the cloud. If we do see the buyers come in, as I've already mentioned, we may see a retracement back up towards this level around 92.78, 93, and then the market continue to sell off. But let's not preempt the market. As I mention all the time, react to the market. So watch the support and resistance levels very closely, and watch how the market may interact with the other Ichimoku indicators.